down on these speculators? Here now to answer is Bruce Vincent, president of Swift Energy and former chairman of the Independent Petroleum Association of America. I have a feeling I know what your answer is going to be, but you have to admit there is a role that the speculators do play in this market to the upside, and maybe, like we're learning, pass to the downside.
Yes, I mean, speculators are simply investors. They do definitely add to the amplitude of velocity in the markets, but they don't have the ability to manipulate price. We also need to remember, I always come out and talked about trying to increase oversight over speculation. Dodd-Frank was passed a part of that for that very reason, and not all the rulemaking has been accomplished yet. So if we should let that follow through and see what the rulemaking does before we start bringing on additional regulation.
But do we have any indication, and I get your point, there are a ton, I think it's a couple hundred actually, of unwritten rules as of yet that have been authorized by Dodd-Frank but not put pen to paper. Do you have any indication of how those rules are going to look based on speculation?
No, we don't. And one of the concerns that producers have is producers use these markets all the time to hedge our products. We're long on the product, and we want to be able to hedge, take some of the price risk out. We want to be sure that we can continue to do that. There's been talk about having an end-user exemption. And in fact, Congress actually wrote a side letter with Dodd-Frank and talked about allowing an end-user exemption. We've not seen the rulemaking on that. We need to be sure that the markets allow end users, whether it be airlines who are trying to hedge fuel cost or producers who are trying to hedge their product that they're going to produce later, not be mixed up with financial investors who aren't long or short of the product.
Because the market has changed, and certain during your time being involved. What is it then? What is it that's changed over the last 10, 15 years? How different is it now, and why is it that there seems to be, this other pool of money out there that's influencing commodities and oil prices so much?
Well, the biggest change is the market's so much larger. The other thing about the speculators, while others try to demonize them, the fact is they bring a lot of liquidity to the marketplace, which helps the people like us who are in there hedging our product. It adds a lot of liquidity, and so it helps really improve that pricing that you have on commodity derivatives.
What would it look like if there was no one trading oil except people who used it?
Oh, significantly reduced market. It would be a lot harder for producers to hedge their product. It would cost them a lot more to do that. Same thing would happen if you all of a sudden started requiring margin requirements on the part of producers. Much of that market may go away, which would in fact add to the risk of our business because we wouldn't be able to manage price risk.
Do you think the president or his economic staff fully understand the role that speculation and hedging play in the market?
They may, but I don't think they do from what you hear. I think they're just trying to deflect responsibility for high gasoline prices to some other third party.
Because if oil was at 40, I don't think we'd hear anything about speculators driving the price down by unfairly shorting oil.
You're absolutely right, but that's exactly what happened in the fall of 08. Speculation is investing. It can go south or it can go north very, very quickly. It will do that quickly, and that's where it adds to that amplitude, the volatility. But it's going to go with the fundamentals. If fundamentals say the price ought to be 40, it's going to drive it down.
What's the only way to get the price to 40 then?
Well, oversupply or reduced demand.
Yeah.
You really see that it always comes back to the fundamentals, supply and demand. You have these other things like geopolitical risk, you have the value of the dollar, you do have speculation.
So either a recession or a miraculous new
recovery is going to change the base fundamentals.
Fundamentally, does natural gas, especially with the Cheniere Energy news, the LNG terminal first approved in America in 50 years, I think it's a huge story. Unfortunately, Apple getting a lot of the attention today. Fundamentally, does natural gas deserve to be at $1.95?
Fundamentally it does today because the industry's been so incredibly successful at unlocking this resource base in America. We've oversupplied the market, but what will happen, just take time, is demand will pick up. You're seeing that already. It's an incredible boon to American manufacturing, American chemical industry, American petrochemical industry. You're adding capacity. We're actually moving a methanol train from Chile into Louisiana because of low-priced natural gas. That will grow demand. The industry is reallocating capital, taking it away from dry gas, putting it into liquid-rich plays. That will ultimately affect supply, and it'll come back into balance. Eventually, natural gas has to be able to compete for capital with liquid-rich plays. Companies like ours who have an inventory of both opportunities are going to drill the liquid-rich plays first. You have to be able to compete for capital. It's probably going to take a couple of years to get there, though.
Bruce Vincent, president of Swift Energy. Bruce, it was a pleasure. Good to see you again.
Thanks. Great to see you, Brian.
Thanks so much.
Nice to see you, Kelly.
All right, be sure to catch Mad Money tonight, by the way. Jim will be speaking with the CEO